All right, thanks for staying with us. As we walk into trade this morning, it's about earnings season and it could be about banks once again. Markets, frankly, in last 1 month have managed to outperform both in absolute terms and in dollar terms. Let's actually look at S&P, and if you compare S&P with Indian markets, I will just pull that data up. We up by about, in dollar terms, that's the correct way of looking at it, because local currency terms, if you're comparing them with global markets, would be slightly unfair. But in dollar terms, I think we've done much better than a lot of other markets. Sandeep, let's look at what we've heard from HDFC Bank this morning. They're growing in a tough quarter. They don't need capital because when the buzz of the capital raise came out, they've denied it. And they now have a formidable 8.5 to 9% market share, at least in the corporate loan market. So HDFC Bank has managed to grow and grow at a time when the industry per se was contracting.
Yeah, so as per the figures released by HDFC Bank, the first quarter growth quarter on quarter was around 1% in advances. So which is not bad in a quarter where we've seen the overall bank sector actually decline by 3% in terms of advances. So obviously that's keeping in line with the historical trends. Year on year, we shouldn't look at because of this entire COVID issue. So comparing year on year might not be a great idea, but quarter on quarter also they have kept the trend. And apparently, as we hear now, there will be more clarity when the results come out that their loans under moratorium are one of the lowest in terms of the overall banking sector. So to that extent, they would benefit. Now, how much of NPAs would come about, which will be known more in September, because till August we have moratorium is something we need to see. But on balance, they seem to be doing decently, and it could. So the stocks actually outperformed in the near term also, and that could continue.
The flip side is ICICI Bank, which is looking at raising capital at a time when credit growth is not there, and the return ratios in the short term could remain depressed because they are looking at raising capital. So two banks following very different strategies.
Yeah, because HDFC Bank was smarter in terms of raising capital because they raised capital much earlier. They raised 20,000 crores, if you remember, I think last year. So ICICI Bank has not raised capital for years now. Unlike many other banks, if you see ICICI Bank capital raising, I don't remember last time it happened. I think it happened many years back. So to that extent, obviously all banks are looking to augment their capital because finally things are not going to be so easy for them because there will be write-offs, there will need to be stress, there will be restructuring of loans, and to that extent liquidity issues might be there. And today with the global liquidity flush for a bank like ICICI Bank, wanting to raise capital at a price which is significantly lower than where it was at the beginning of the year might not be as difficult. So I think they are building in a buffer, which is not a bad thing. So it makes sense for them to do that when liquidity is easily available rather than try to do it when there is liquidity tightness or there is risk averseness in the markets. So, and what the capital that is being speculated is quite significant. So I think once they raise that, that will be enough for them. If that's the figure they're going to raise, should be enough for them for at least the next 3-4 years.
All right, let's in fact get you up to speed with all the numbers when it comes to the banking space. Let's go across to Varun on HDFC Bank to begin with. Varun?
When is the last time that the 4 or 5 largest banks in the country declared fundraise within a 4-week span of one another? Kotak Bank, end of last month, QIP plus share sale completed. Axis Bank, board approves 15,000 crore fundraise just 4 days ago. ICICI Bank announces looking to raise $3 billion last week, and yesterday we learned that the board meeting for the same will now be held on the 8th of July. SBI has come forward and said that they're considering a fundraise, so has HDFC Bank. So the 5 largest leading banks in the country are coming forth and evaluating a fundraise. There's a whole host of smaller financials, M&M, Bajaj, Union Bank, Bob, which have either completed a fundraise or will be evaluating another fundraise. What's common over here? Capital adequacy ratios are sufficient. Everyone has above the required capital adequacy ratio, yet they're still raising. And that's what's spooking investors and causing an alarm on the street. Now, leaving the fundraise aside, the first bank, HDFC, to report its quarterly update. Now, if you ask me personally, there should be an asset quality and a provisions update as well with these, because people read in too much to the advances and deposits and start forming conclusions as to what the quarter is going to be like, but we really don't have a clue. As for the advances and deposits, HDFC on a YOY basis has grown advances still in Q1 by 21%. Deposits have still grown in Q1 by 25% if you look at it on a YOY basis. Now, I wouldn't pay so much attention to these numbers. I would look at the sequential more, because that shows you a more current, recent picture. And if you look at the advances, they've only grown by 1% from Q1 to Q4. And if you look at deposits, they've only grown by 4% from Q1 to Q4. So there's definitely a slowdown in both lending as well as deposits compared to what we saw last year. YOY figures may still look impressive, but sequentially, you've got to keep an eye out for how these numbers are really shaping up. Apart from this, your CASA is held up at 40 for HDFC Bank, which is a major positive Q, and they bought around 1,400 crores worth of loans from HDFC Limited. So that'll keep all these counters fairly active today, especially ICICI and HDFC Bank.